Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome back to Galaxy Brains.
Thanks for having me.
So, gosh, I mean, I was on vacation last week, so there was no
Yes, you were.
episode. The last episode we did, Bitcoin was at all-time highs. It was at, I think over my shoulder, it was 123 or 124. The story looks a lot different at the moment. We're at 111. I mean, you know, is that it's still kind of just the range, but it's kind of funny because we were at 108 in January. So right now, as we talk, Bitcoin's just sideways all year, almost no gain at all. All of that, and Ether has come back from its new all-time high, which it did hit last week again. Sort of, what is the genesis of this pullback? And it had happened in stocks as well, but stocks have since rebounded.
Yeah, I mean, I think basically Bitcoin is losing out in the attention economy at this point in time. You know, ETH has kind of overtaken it on a volume basis and on a handful of days certainly from a mind share perspective, just because it's gone from 1,500 at the lows to 4,600 as we're filming this, and when things move up in a straight line and there's a figurehead that's like charismatic and people are paying attention to it, it really grabs a lot of attention. So I think you've seen a meaningful rotation away from Bitcoin into ETH. Point one. Point two, we've seen a significant amount of whale selling on BTC. There's one prominent whale that's been selling BTC and buying ETH in particular as well.
On Hyperliquid.
Yeah. On Hyperliquid.
Yeah.
And so, you're seeing a lot of profit taking in BTC from folks that have held BTC for a very long time. Mm-hmm. And then in terms of the retail interest, like you see it now, like the ETF inflows for Bitcoin are much more muted relative to ETH in particular.
Beaten it.
Correct.
Not just on a market cap weighted basis, but
on an outright dollar term basis.
And several weeks now.
And it has to do with the prominence of digital asset treasury vehicles, right? Prior to the sell-off and like basically for the majority of the last 2 years, the most notable buyer in the space was MicroStrategy. And MicroStrategy has been acquiring fewer and fewer Bitcoin over the past couple of months because they've had a change in kind of their policy, as well as, their premium has declined.
Right.
Versus, with ETH, you've got, SharpLink, Bitmine, and they've accumulated a ton of ETH.
I think Bitminer, Tom Lee's vehicle, has more than 2% of all ETH already.
Yeah, I think
in a short amount of time.
Correct.
So enormous amounts of buying.
Enormous amounts of buying. Now the question is how sustainable that is, and it's sustainable to the extent that price keeps going up for the most part.
It feels almost like the classic cyclicality finally kind of happening, where Bitcoin leads the way. Eventually, ETH steps up.
Yeah.
And if it plays out, and it doesn't mean that like the whole cycle will degrade, but sometimes these are intra-cycle, intra-coin cyclicality. You could see, 2017 Bitcoin all-time high, early 2018 Ether all-time high. In March, like altcoin all-time high, right? Like that could end up being what's happening from the rotational standpoint.
It might be. But, I will note that there are, like, serious things happening in crypto simultaneously that are kind of adjacent to, like, these token appreciation. Like, Google had the announcement yesterday, their own L1. You've had Hyperliquid, right? They're generating almost, like, a third of all, like, revenue on chain.
Yep.
And, that's trading at all-time highs.
Yep.
You had JP Morgan announcement yesterday, partnership with Numer AI, I believe it's called.
AI
Numerai,
algo type firm.
Yeah, and so you're
Numerai,
I
guess.
And you've had like a bunch of like stablecoin and payments related headlines as well, and so the progress towards making crypto the preeminent infrastructure play for traditional markets and the traditional world, like we're making significant strides each day.
Not to mention tokenization
and
all that type of stuff. Yeah.
But again, like, this is where I struggle. It doesn't necessarily mean that tokens like are worth more.
Right. Right.
And so like that's kind of the tension in the market. But right now you've got a good flywheel where, you know, these digital asset trust companies are trading at premiums. They're selling stock to willing investors and are then buying, you know, spot, which is causing, you know, price to go up.
Yeah, and I think even in Bitcoin too, it's like people have been. It's funny, like there's a lot of malaise about price action. Like I said, it's almost flat
Yeah.
year to date at this point.
No.
But Bitcoin, year over year is up more than 50% still, right?
Yeah.
It's been a big run, and it doesn't mean it's over. I don't believe it is. I'm still calling for higher by the end of the year. But I want to pivot to, we can talk about that more. I mean, and we will over the coming weeks, obviously. But there was other huge news that I know you want to talk about, which was the Fed's meeting in Jackson Hole last week.
Yes.
And I guess the headline that drove a lot of action and drove stocks to all-time highs was that the Fed is abandoning the language of its 2% target? Are they actually, is that right? And also, was it just the language, or are they actually abandoning the policy of their 2% inflation target?
Well, the way I would frame it is, simply put, they are much more concerned about the risks around the labor market, so much so that they're willing to forego their inflation objective.
So right now they're willing to try to spur the labor market more than
Try
they
to
want,
prevent additional weakness in the
Right.
labor market.
than beat down the risk of inflation with keeping rates higher.
Correct. Now, I think this is a major policy error by the Fed. Everything we've seen so far suggests that pricing pressures are not only here, but that they're persistent in key sectors of the economy, including services, which is by far the largest portion of the U.S. economy.
And like
but
housing too, right?
everything, housing prices are at all-time highs,
Right, and lowering rates.
and asset prices are at all-time highs, right? And lowering rates is not going to improve the mortgage market.
Right, it's going to make it more competitive, right?
It's going to, well, no, the back end of the market is responsible for setting
That's
mortgage rates, because mortgage rates typically
true.
have a duration profile that's very long. And so what the market reaction to the Fed lowering front end interest rates is going to be is, like they're not that serious about tackling inflation.
So higher long end.
The back end should move higher in response to a perceived policy error by the Fed. But you just have to think through the figures that we're seeing, right? You're talking about core PCE estimated to come in at 0.3% month on month, which is like it's like 3.5% annualized. And you still haven't felt the effects of the tariffs. PPI surprised to the upside, right? It came in at a 0.4 month on month. Import prices also, surprised higher. And then you're seeing things like abroad where like Chinese export prices have finally started to rise as well. And so, we're at this juncture where inflation is elevated, still super elevated, and we haven't seen the full effect of the tariff policy.
It could go higher.
Right? And so you're telling me, oh, yeah, the job numbers, we were bad at calculating them, so they came in really light. Okay, great. That's the past. What do we know about the future? The future entails almost like a $1 trillion plus of capex that's going to go into the economy over the next 12 to 14 months, right? That is a ton of build out, in energy sector, in semiconductor, in construction jobs, right? So I've got, one of the guys I talked to, he's estimating an additional pickup of around 75,000 jobs per month from the capex that's been announced.
For data centers, AI,
Correct.
All that type of stuff?
Right?
So you're saying supportive of a better labor market.
A much better labor market. And then you still haven't felt the full effects of the big, beautiful bill. Like, it is a massive bill. You're talking
massive spending bill.
Massive spending bill. And so that will also create jobs.
And push inflation higher.
Correct.
So you're saying, and also the data on jobs, just to be clear, while there were revisions, and there was the scary report like 2 months ago, where it was like, oh, wait a second, the only jobs being added are like in-home care, right? Which is scary. But still, the top line employment numbers also don't look that bad at the moment, right?
4.2% unemployment rate.
They don't look bad. they could get better.
Yeah.
And some of the factors that might make them look better also push inflation higher. And this is why you're saying a policy error, you think?
Policy, and then you also have the fact that we have a new BLS head, and Trump wants higher job numbers.
You think the job numbers will, even if they're not lower, they might look lower.
But it's such a tricky dynamic. But what people have to realize is that, when the genie comes out of the bottle with inflation, there are economies that have been desperately trying to quell inflation for the better part of decades.
Yeah.
Right? And once that genie's out of the bottle, like the medicine for it is one that's not palpable in the current, economic society or political society. It's just not palatable for people. And so when you move too early as the Fed, you're risking something much greater, which is like a loss of confidence in your ability to maintain price stability. Right. And so I just think we're being a little naive and succumbing to, political pressures, whatever it may be, by being like, oh, inflation mandate. Nah, that's not as concerning as the job stuff right
now.
If
you picked one of the two mandates, promoting employment or maximum employment or whatever, and price stability, in my mind, price stability is the one of the two that the Fed has a better chance of impacting with base rates.
Correct.
Right? Way more government policy and other things go into whether or not people have jobs than just what the overnight interest rate is. Right?
Correct.
So it's like they're also using their tool on the thing that it's worse. They're prioritizing its use on the goal that they're worse at solving with it.
Correct.
Right? Like they have a better chance at keeping inflation down than they do promoting employment using rates. So
I completely agree with you.
What do you think? Is it political pressure?
I mean, it's a bunch of things, and there are folks that are respected economists at the Fed that are perceiving the data a little differently than other members, and I totally respect that point of view. But you can't tell me that inflation hasn't been above target for the better part of the entirety of 4 years. Right? And the consequences of runaway inflation impact every American, employed or unemployed. Right? If wages don't keep up, inflation is a tax on the consumer. And it's a runaway train a lot of times. And so that's why you're seeing things like gold, continuing to trade well, all-time highs.
Yeah, and then gold didn't have a DATCO run because that's some of what's just coming off here with Bitcoin too. Is just the exuberance of, it sounds problematic and troubling.
Yeah, it's problematic and troubling, but again, it's just there's too many folks that I think have such a short-sighted view of markets, right? Even Powell, to a certain extent, his term runs out in 6 months or less. I think it's 5 months.
I think it's May of next year or something like that, right?
Yeah.
So, that's
so,
8 months.
And then you've got, the president that's focused on these 4 years. And, you've got Congress on 2-year cycles and senators on 6 years. It's just guys, I would like to be 55 years old and a home not cost $10 million for an entry-level home.
Right.
Can we address that?
Yeah. Well, I don't think we can. It doesn't seem like we can.
We don't have the will to.
We do not have the will.
I will tell you, we have tackled aggressive inflation before in the past.
You're thinking about Paul Volcker?
Paul Volcker.
Yeah.
Right? Jacked up interest rates.
Really high.
Really
20% or something, right?
18 or 16. But he beat inflation. It's possible.
Yeah. Have you ever seen that image? I think Joe Weisenthal posted this, but it's of a mountain range in Wyoming, and it happens to look just like the 70s and 80s inflation, or what, maybe rates. Yeah.
What we need in markets is Paul Volcker-esque courage to do what's hard. Not
Powell has said that Volcker is his idol. Maybe he's tired. He looked tired. I mean, it's not literally tired, but I mean, in some photos, he looked in Jackson Hole gosh, man, I've been doing this a long time, exhausted.
Yeah.
It's been an exhausting
again,
run.
To your criticism, of the Fed, which I totally respect, by the way, we did make a policy error by having policy way too easy for way too long during COVID.
That's right.
Right? And if you had raised rates much sooner, and constricted the economy, like maybe we wouldn't have as much of an inflation problem right now. And so, but at the same time, you could pass blame to Congress as well. Like,
Oh, yeah.
yeah, you sent out helicopter money. What do you think that's going to do?
Oh, yeah. And even now I saw Trump is talking about more possibility of more helicopter money, that some of the funds earned from tariffs could get rebated to Americans. Surely they could just not do the tariffs and let us keep the money in the first place, from our goods not going up. But anyway, that doesn't have the same headlines. He likes to put his names on the checks. Right? Didn't he sign them himself or something the last time during COVID? Or you had like his,
I'm sure
there was something like
but
that. It said like
realistically,
from
you
President Trump.
understand that it just gets wired into your account.
I know.
But anyway,
That's true. I didn't get a check. Yeah.
If you did get a check,
I think
it's
it was
based on
just
your
if you
tax
pay
returns.
taxes. Yeah.
Yeah, and it's based on
Yeah, maybe if you mailed your tax return
correct.
in,
You might have gotten
then
a
you got a
check.
physical check.
Yeah.
But most of us just, ACH it or whatever.
Yeah.
All right. Well, we'll keep following it. My friend Beimnet Abebe from Galaxy Trading, thank you so much.
Thanks for having me.